Good afternoon, everybody. Happy Friday from a very nice and sunny Gloucester. Very busy week in the Frank Funds office. Like I mentioned last week, we moved office during the week, so we're just settling into our new Milsons Point office. Strategy development and new API integrations for some of our strategies have been the focus. Let's hop straight into the five biggest developments for the week. Firstly, US manufacturing ticked up to 49.0. The prior reading was 47.6. So although it's still in a contractionary territory, it just showed a slight improvement. The uptick, a lot of that was due to the seasonality over the summer period. Australia held interest rates steady at 4.1% for the week. Again, the common communication from the RBA has been around allowing some time for the interest rate increases to work their way through to the economy. And we're starting to see this. This is the fourth consecutive interest rate hold in a row. This was in line with market expectations, and we've seen somewhat muted performance coming from the Aussie equity market around this time. The biggest thing was from the Aussie dollar dropping quite substantially. Third thing, Swiss CPI showed deflation, negative 0.1% for the month of September. This just shows that the effect of interest rate increases that has been put into the market over the last 18 months has really started to work the way through into the Swiss economy. This is quite significant. This is one of the first deflationary readings that we've seen from global CPI and G7, G10 economies. New Zealand, the RBNZ, left their interest rates unchanged at 5.5%. They did say that their economy is still continuing to run slightly higher than what they would like, but same sort of communication. They are holding so that they can allow the effect of these interest rate increases to continue to work their way into the economy. And the last one, US ADP, non-farm employment change slumped to 89,000. Expectations were a lot higher than this at 154,000. Manufacturing, trade and transportation accounted for the biggest job losses. So it does confirm that the effect of interest rate increases in the US are slowly working their way through into the labour market, which has been one of the most resilient parts of the US economy. Here we can see the performance of a range of futures markets. It's been a real wild week with very few things showing positive attribution over the course of the week. Orange juice has continued to do very well. Natural gas also had a very good period. The VIX index has also increased over the course of the week, and a lot of that is on the back of very negative performance coming in from some global equity markets. The Nikkei, the Nasdaq was down over the course of the week, just marginally. And then you've got the S&P 500, Russell 2000, all having a lot of volatility. Commodities have been very, very mixed. Probably the biggest thing to look at here is the large decline in crude oil, crude and Brent, and also heating oil. The volatility there has flowed through to some of our Australian listed energy companies, which we'll talk about in a second. Outside of that, generally precious metals have been very weak, with profit taking and them all hitting very significant levels, some hitting 6-month lows, 12-month lows, and also some hitting even 1 to 2 year lows. Here you can see the Australian constituents, ASX companies that have market cap over 10 billion. You can see it was a very, very weak week. Again, CBA, ANZ, NAB all having very poor performance. We've seen slight rebounds here coming in from Rio and Fortescue. BHP relatively flat for the week. A lot of that coming in from their oil and gas exposure. The one of the worst performers in the material space, Mineral Resources. And then on the other side, there's been some very weird and money flow based movements coming in from the gold miners, and a lot of that is to do with the Newmont acquisition. Newcrest down, Northern Star reweighting into Northern Star up 4.1%. There has been somewhat of more of a defensive rotation once again across into Wesfarmers, Woolworths, Cochlear, and some of these names where money is flowing, generally is a little bit of a safe haven. The frame funds trend barometer, you can see, has been at somewhat elevated levels more recently, just showing that a lot of futures that we track are making new short-term highs and lows, as well as a good basket, about 10% of the whole universe, is making new very long-term highs and very long-term lows, which again is very interesting to see because it just shows that there are these big structural changes happening in the market across a wide variety of futures markets. Outside of that, hope you have had a nice short week and look forward to a nice weekend. Speak to you soon. Speak to you next week.